Cash flow versus profit. Why do owners of small companies suffer even though their companies are profitable? It's because cash flow is oxygen to as oxygen is important to the body, so is the cash flow is important to the body. And when there is no cash, the companies suffocate, they struggle. The same way the body will struggle when there is no oxygen. Long time back, I read the book about somebody called Ram Charan, a very well-known consultant in the US. It was after the financial crisis of the years 2008 and 2009. He said cash flow is too much important to be left to anybody else except the top guy, the top person, the responsible person, number one of the company. I remember long time back, those days, the way cash flow was handled in the company, it was prepared with entries, credits, debits. The credit side, you had the checks on hand, the quote-unquote expected collection, and on the other side you have the committed payments. Now we start the year very comfortable, the month very comfortable, and feel that by the end of the month things will work themselves out, and we will be out of the month very comfortably because we have enough funds to go through the month. What happened in the fourth week was all of the sudden 150,000 or 200,000 dirhams move out from this month to the next, and all of the sudden you are faced with a shortage, with a deficit, and there is a big amount that you have to cover. That's when you lose breath. That's when you suffocate. That's an alarming bell. That's an emergency. That is panic. The same way when you try to get that last breath to survive. Because the way it was prepared it was based on planned, expected, but things don't work themselves out. Because you have to have those funds to cover the month. There are bills to pay, there are checks to honor, there are all sorts of expenses that have to be paid for. So when that amount disappears, it is the most difficult situation we business owners find ourselves in. And why does that happen? There are different reasons. We'll just discuss few issues. There are what you call traps. One is a sale. When you make a sale and you feel happy because printers are running, making invoices, delivery vans are rushing to the customers with goods. Problem is that those goods have to be paid for, but you will not get the money until maybe after 2, 3, 4, 5, or even 6 months. A very bad situation. The bigger your receivables are, the more difficult situation you'll have. Second thing will be your inventory. You see your warehouse is full of goods, then it means you can sell. Problem is, that's another part of your working capital. Working capital is your receivable and your inventory. Again, those goods sitting in the warehouse have to be paid for, whether it's bank facility, TRs, checks to the suppliers, upfront cash, or whatever. A lot of people will rely on debt to cover that. Maybe that's even that's a painkiller only. That's a short-term solution which makes the long-term, which delays the long-term issue and makes it maybe more difficult. So how to tackle all these things? Actually, I've discussed maybe one or two sides of it, maybe the higher gross profit, debt, looking, and all these things will have to be discussed again in future. We'll have to look at them more in more detail in future. This remains a very difficult situation. Cash flow is maybe, as I said, is the oxygen. Whether you have the money in the bank or you don't. Profit, yeah, it is a book entry. It's an accounting entry. It's a concept. It can be maneuvered. You can be profitable. You can have the sale. You can get that contract. You can win that order from your biggest client. But you have to provide the goods. You have to pay cash upfront. You have to pay for so many things before you even start working. Thanks. We'll talk more about this subject again.